All right, so let's resume the question of gamma code that we were doing. So we completed till the seventh transaction, which is our for analyzing into direct and indirect elements. So let's quickly revise these stages. So in the first stage of maintaining of the cost accounts, what happens is that the first entry of for any cost item is done in any one of these three types of accounts: material, labor, or expense. So this was the first stage. Every cost item must go through one of these accounts. So it is important. So in the second stage, what happens is that all the direct costs are transferred, or you can say debited to work in progress account, and all the production overheads are debited to are transferred to production overhead account. So this can be seen in this diagram, right? And all the non-production overheads are then transferred to the operating expense account. So this is the visual representation of these stages. So this is the reason that I have included this diagram here. So you can create this diagram, these arrows by yourself. So it will greatly help you in learning of this concept. So this was the second stage. In this lecture, we will also be covering the second stage only. In the third stage would be in the next lecture. The third stage, fourth and fifth stage, and sixth, seven. These stages are very short. This is a little bit tricky, but very short, and the all the remaining are very short and very easy. For example, this stage only includes just one double entry. This stage also is completed in just one double entry. So the remaining stages are very simple, very easy. So let's resume this question now. So let's start this eighth transaction. So $15,000 depreciation was recognized. And so if you are watching this video for the MA1 exam, then double entry for depreciation will not be tested, but it could be tested for the FMA exam if you're watching this for FMA, because this topic is definitely tested in MA1, MA2, and FMA exam as well. So eighth transaction. So how do we record it? We will just debit expense account like we debited labor account in the case of for the cost related to employees, and we debited the material or purchases account for the when we were entering the cost related to materials used in production. So similarly, this is an expense, so we can debit the expense account, but we can also write it as depreciation account. So we can make a separate depreciation account for this expense. So for individual expenses, separate accounts could be maintained. The business can maintain them in just one account. It is possible, but it is normally the case that the depreciation account is a separate account, which includes the all of the depreciation or related to its non-current assets. So debit depreciation 15,000. What was the amount, right? It was, yes, 15,000. So 15,000 depreciation was recognized, and then credit. So what would be the opposite account that is going to be credited? So for example, for the case of labor, the opposite account was cash here in this transaction. So credit account was cash, income tax liability, benefit contribution liability. In the case of material, it was cash. It may be payable also if the material was purchased on credit, for example. But here, of course, we are not paying the depreciation. So depreciation is definitely not a cash flow. So what are we going to credit then? So we are going to credit the asset account, right? Because this is a reduction in asset. Because what was depreciation? In very simple words, in very simple terms, depreciation is a reduction in value of a non-current asset. So this is the reduction in value of an asset, right? So that is why we are reducing the value of the asset by 15,000. So we have taken the benefit of the 15,000 worth of the asset. So that is why we have recognized the depreciation as the expense. We have recognized 15,000 as depreciation, which was our expense for the period. So this is the eighth transaction, double entry for eighth transaction. And then for the ninth transaction, it is written as 66.67% of the above depreciation related to production equipment and remaining related to non-production. So it is saying that of the above depreciation that we recognized in the eighth transaction, which was inputted into the system, 66.67% was related to production and the remaining related to non-production, meaning the remaining 33.33%. So, this transaction is related to the stage two, right? So this is the stage two. I think I should mark it here also. So this is related to the stage two. So stage two. So in stage two, you must remember that all the production overheads are transferred to the production overhead account. All the non-production overheads are transferred to the operating expense account. Depreciation is never a direct cost, right? So that is why we are not going to transfer any of the portion of the depreciation to the work in progress account. So it can be transferred to the production overhead account, or it can be transferred to the operating expense account, but never to the work in progress account because it is never a direct cost. So debit production overhead account because we are transferring to the production overhead account, and debit operating expense account, and then credit from where it is being transferred. It is being transferred from the depreciation account. So 15,000 is being transferred. 15,000 66.67% is being transferred to the production overhead account because this was related to production overhead. So or we can just write it as 10,000, and the remaining 5,000 is transferred to the operating expense account, right? So we can now check debit is equal to credit. So we have done this correctly, right? So now we should write this transaction in here. I rewatched the video and I remember that in the past I made I skipped a step. I skipped the transfer uh, of the, I guess, third or fourth transaction into the material T account. So I should do this. I think it was fourth transaction. Fourth transaction is a transfer. Yeah, right. Fourth transaction, I wrote it in I updated the work in progress account and production overhead account for it, but I didn't update the material account for it. So I should update the material account as well. So material account is being credited by the amount of 9,000, right? So in this what was it, fourth transaction. So work in progress, sorry, material account is being credited by $9,000. I should move myself below. So material is being credited by the amount of 9,000. So we have to write the name of the opposite account. What are the names of the opposite account? Work in progress and production overhead. So we will write the names of these accounts, work in progress and production overhead, and the related balances are written in front of them. So 7,000 was related to work in progress and 2,000 was related to production overhead. So we have debited the material account with a total of 9,000. So I think everything else was completed. So now let's just put these transactions into the T accounts. So depreciation, we are going to create an account for depreciation. This labor account was cancelled, so we can mark it as cross. So let's add a cross here. I think it is from here. Shapes. Cross, cross, cross. I think this is cross, but it more looks more like a plus sign. I think I can edit it. It's very tricky to use. I think it looks now much like a cross, right? So yeah, so labor account has been cancelled. Why? Because of course debit is equal to credit. Everything that we transferred to the labor account, we debited to the labor account. We then in the second stage transferred it to the other accounts. For example, the direct labor cost was transferred to the work in progress account, and the indirect labor cost related to production was transferred to the production overhead account, and the indirect cost related to non-production was transferred to the operating expense account. So you can see this here. So the labor account was emptied. So now let's make the depreciation account. Depreciation account. So let's write these eighth transaction here. So in eighth transaction, what is happening is that we are debiting the depreciation account, right? So we have to use the debit side, left side, and we have to write the 15,000, and we have to write the name of the opposite account that is being credited, which is the asset account. So we have to write 15,000 on the debit side and use name of the opposite account, which is the asset account. So we have debited the depreciation by 15,000. So we have posted the eighth transaction on the D account. Now we have to post the ninth transaction on the D account. So what it is, we have to credit the depreciation account by 15,000. And we have to write the names of the two accounts because these are the accounts that are being debited. So production overheads and operating expense. In front of production overhead, we have to write 10,000, and in front of operating expense, we have to write 5,000. So let's do this. So 15,000, we are going to write it in through two lines, production overhead, because some portion of the depreciation that was recognized was transferred to the production overhead, and that was 10,000, and the other portion was transferred to the operating expense account, which was 5,000. So we have credited the depreciation account by a total of 15,000. So now let's copy this and paste this there also. So depreciation account has been emptied now. So we are not going to make the asset account because it is not a cost. It is not a cost account. But of course, we have the production overhead account and operating expense account. So we are going to debit them by their respective balances. So production overhead, we need to debit them with 10,000. And we have to write the name of the opposite account that is being credited, and that is the depreciation account. So depreciation, we can write it short as DEP only. And for the operating expense account, we have to write 5,000. We have to debit it by 5,000. So where was operating expense account? Here it is, 5,000. And we have to write the name of the opposite account that is being credited, and that is depreciation. We have completed this transaction. Now let's move towards the 10th transaction. So let's read the 10th transaction where it is 14,000 rent were paid, $14,000 were paid as rent. Actually, we can combine this transaction and this transaction. It will save a bit of time because I think these are just very repetitive tasks. So that is why we are doing it. So we can make, I can say that 14,000 were paid as rent and 8,000 were paid as utility bills. So a total of that was amount paid was 22,000, right? Yeah, 22,000. So 22,000 cash was deducted. So the account that we would use would be rent and bills. So we can assume that the company combines these in a single account, and it happens in some businesses because you can combine the accounts, combine the expenses as it suits you. So rent and bills account, and then credit cash. Cash has been decreased by 22,000. And why was this decreased by 22,000? Because it was related to rent and bills. So it is 10th transaction, and we have combined the 12th transaction. Similarly, now we will combine the 11th transaction because it is saying that 8,000 of above related to production and 6,000 related to non-production. It is talking about the above recognized rent of 14,000. So we have to, in the 11th transaction, we have to debit the production overhead account because the rent will obviously not be a direct cost and will not be debited to the work in progress account. It will be debited to the production overhead account. So 8,000 would be debited to the production overhead account, and the remaining 6,000 has to be debited to the operating expense account, right? So in the 13th transaction, 5,000 of above of the utility bills but related to production. So obviously they will also be what? They will also be debited to the production overhead account and not work in progress account because not a direct cost. And the remaining 3,000 will be debited to the operating expense account, right? So we can combine this. So the total amount that would be debited to the production overhead account would be 8,000 plus 5,000. So it will be 13,000. Yeah. So 13,000. So let's write this 11th and 13th transaction. We are doing double entry for this. So debit production overhead and debit operating expense and credit rent and bills account. So everything that came to the rent and bills account, the 22,000 balance is now being transferred to the production overhead account and operating expense account. Why? Because of course this is stage 2. So in the amount that is being transferred to the production overhead is 13,000, and the amount that would be transferred to the operating expense account would be 6,000 plus 3,000, so 9,000. So does this sum up to the 22,000? It must. We can check the here. So yeah, debit is equal to credit. So we have we have done our calculations right. So now we have to just put the T accounts for these. So rent and bills account. Let's just empty this. So rent and bills account. So we debited it by in the 10th and 12th transaction, we debited them by 22,000. So we have to write the debits. We have to write 22,000 on the debit side, 22,000, and we have to write the name of the opposite account, which is cash account, because we paid it on cash. And now we have to transfer all the 22,000 to some other accounts in the second stage. And what were these accounts? We transferred 13,000 to the production overhead account, and we transferred the remaining 9,000 to the operating expense account, right? So this account has also now been emptied, just like depreciation account. So now we have to update the production overhead account. We have to debit them with 13,000, the production overhead account. So this is production overhead account. We have to debit it by 13,000. Where did this 3,000 came from? It came from rent and bills account, 13,000, right? And then operating expense account, we have to debit it by 9,000. Where was operating expense? Here it is. So 9,000, we have to debit it, and then we have to write the name of the account, which was the rent and bills account, right? So this has been completed now. Here is one transaction remains. One transaction is remaining regarding this expense. So it is this transaction. 2,000 fee was paid to independent contractor for work on specific unit. You see, the question is almost being ended. So I think I made a mistake. Let's undo it. Undo is really a blessing. So what was I saying? I was saying that we have almost completed the question, and these last four transactions are related to the other stages, to the remaining stages 3, 4, 5, 6, and 7. So of course these stages are important, and but they are very easy. So let's do the 14th transaction. So what it is, 2,000 fee was paid to the independent contractor for work on specific units. So you remember the independent contractor case. Of course, independent contractor fee is not a labor cost. Why? Because it is not an employee. It is not your employee. So independent contractor, the fee that is related to the independent contractor is recognized as an expense. So, and of course, it is written for work on specific units. So this means that the cost of 2,000. Sorry, the cost of 2,000 is traceable to these specific units. So it is a direct cost, right? So 2,000 fee that was paid to the independent contractor is a direct cost. So it must be transferred to the work in progress account. So we can write it as 14A, in which we will just do the entry for the first stage entry. And what would it be? Debit. We can make an account named as independent contractor fee, and credit cash, right? Because it is written as paid. So what is the amount? It is 2,000, debit 2,000 and credit 2,000. So this is the stage 1 entry, and then let's do the stage 2 entry. So under stage 2, of course, the direct costs are transferred to the work in progress account. So 14B So it is debit work in progress account and credit from where it is being coming from. It is being coming from the independent contractor fee account. So 2000 and 2000. So now let's make the T account for it. Independent contractor fee. So let's empty this account. So it was debited by 2000 and we have to write the name of the opposite account, cash account. And now the whole balance of 2000 was transferred to the work in progress account. And this account was emptied. So you must be thinking, which are all these accounts, all the cost accounts are emptied? No, this is not the case. Not all cost accounts are emptied. Which accounts are not emptied? The accounts which are hybrid accounts, like material account, like work in progress account, like finished goods account, because these three accounts are performing asset function as well, because these are hybrid accounts. These are expense account. The hybrid account is the one that performs both the asset function and the expense function. So these three accounts are performing both the asset function and expense function. That is why closing balance remains on these accounts. So all the cost that is being debited, that has been debited to these accounts, is not credited. Some portion of the inventory remains at the end of the period, and it is known as closing inventory. So these accounts are not emptied. Production overhead account will be emptied. You will see later in the next video, and operating expense account will also be emptied. So all the other accounts are emptied, but not the material, work in progress, and finished good account. So this was the stage two. Stage two now has now been completed finally after so much double entry, so much working, so much T accounts. So this was the stage two, which is very important stage, of course, and the most lengthy stage. The stage three would be very quick but very important, and the stage 4, 5, 6, 7 would be very fast, very quick, and very easy. So this was all. This was stage two. So I hope you are liking this content. If you are watching this on YouTube, make sure to do subscribe, like, and share the contents to show your support. Right. So we'll meet in the next video. Hafiz.